Read the paper with me while I catch up on ESG investing. Investors turn backs, inclusive's ESG mission. Now, I have a personal history with this fellow. Jeff Ubben was a value investor. So I followed him. I followed him stupidly into Nikola, paying the same price that he paid when the stock was double that price with a cute little put option trade. But of course, it got slash 90% from that price because the thing was not ready to be public, was fraudulent. Founder got in a lot of legal trouble, et cetera, et cetera. And apparently this fund didn't do great either. So like, wow, value guy in ESG, great, something I can do. Always wanted to invest in clean tech and always seemed expensive and not easy to understand. So I'll just follow this 13F. Don't always do that. Doesn't always work. So let's see how they got into trouble beyond just losing me money if I was not doing enough of my own due diligence. He's basically winding up the fund, returning capital, citing loss of confidence. And basically he got canceled by the ESG crowd for basically investing in dirty businesses and trying to shake them up or get better ESG pledges out of them. The hedge fund, so there's a lot more climate tech and like venture, and people didn't know what bucket to put it in. He invested in biochemical, which owns Monsanto now, which is not exactly a darling of the green crowd. I also mentioned the fact that he got on the Exxon board after and number one, some directors appointed. Previously told the Financial Times that Inclusive did not have any ESG investors, adding that the movement is a virtue signaling exercise for asset owners. In the same breath, he urged the same investors, do not cancel me. Lots of people in ESG agree that it's currently a virtue signaling exercise and its current iteration needs to be regulated and picked up, which is starting to happen. But it's interesting that maybe he was too early or like he fell between the cracks, didn't find the right product market fit, we say in Silicon Valley. Conclusion here is Inclusive's inability to define itself left it vulnerable to a broader investor pullback from ESG funds. People are not willing to forego returns, but that's not what ESG is. It's not necessarily conceptual capital. So was it sold that way? I don't know. A few other high-profile failures besides Nikola lost most of their value were Progress, a vertical farming startup, and Unify, a sustainable fiber company. Were those venture investments that they had a down round, or did they go public too early, like some crazy SPAC deal like in the bubble, and they thought when they shouldn't have, they lose their value discipline? I don't know. I'd love to learn more about this. Anyone who knows more about Jeff Ubben's Inclusive and its demise, hit me up. I'd love to pick your brain and get the dirt.